Sen joins in. He's the energy analyst at ICICI Securities. He joins in to give us his view. Probal, overall, after pouring through the numbers for about 12 hours, what has your take been, and how do you see the stock move?
Well, I think the numbers are again fairly solid. That's not really changed over the last 3 to 4 quarters. I think we have seen that that's the benefit that Reliance gets of having such a diversified business mix. That any one business's weakness, which in this case was the OTC segment, as you mentioned, because of the shutdown of several key units in one of the refineries, that was completely offset by the kind of strength that was shown in the upstream business because of the improvement in production, as well as continued momentum in the retail as well as the geo businesses. So to that extent, I think the results were pretty solid. One thing that also stands out, of course, is the fact that Capex has reduced quite a bit in this quarter. We'll have to see whether that kind of a slowdown sustains, because remember that the management has mentioned that some of the new energy facilities will start to get commissioned by the latter half of this year. So we'll have to see what the renewed Capex run rate is over the rest of FY25. But if this is the beginning of a trend in terms of what the Capex run rate is going to be, I think that will be a keenly watched monitorable, because that directly impacts the kind of net debt levels that you're sort of building in for the rest of the year. Those have been persistently high, for a fair while now. And if there's a from a flattish level now, if there's a sustained decline that starts to happen, then you're going to see that improvement coming through in FCF yields, return ratios, and whatnot. And I think that, to me, will probably be the biggest monitorable over the next 12 to 18 months.
Okay, thanks a lot for that, the overall, estimate on the numbers. But I just wanted your view on the stock as well, if you want to give us a target price, because the stock is at a good run. It's now, 5% away from its 52-week high. Do you think, given the steady business movements across the consumer-facing businesses, oil and gas not too bad either, can the stock sort of surpass those 52-week highs?
Honestly, to be honest, we are still reviewing the numbers. We have not released our update yet, so I won't be commenting on what our revised numbers are at the point. Before the results, we sort of had a target price of around 26 or 100 rupees with a neutralish rating on the story. So I think there are two things that can probably drive the stock. One is, of course, the visibility on new energy businesses, I think, will be keenly watched, and that can be a good trigger over the next 12 months for the stock to move forward from these levels. The second, as I said, movements on net debt as well as return ratios and for FCFs, how that plays out. The third factor, I think, would be one of the things that the management did mention with respect to the OTC business, which still does drive cash flows to a certain extent, is that the petrochemical business continues to remain muted, while Reliance still does far better than any of its peers in the global markets because of the integration that it has across its downstream businesses. But overall prospects for the petrochemical businesses continue to be much more muted, and therefore that can offset a little bit of the refining strength that we are seeing over the next 2 years. So these three factors, the story around retail strength, the story around improvements in geo, I think those are something that will continue to be there and are probably built in to consensus estimates to a certain extent. But these three factors...
Since you're talking about positive surprises, there's one more, right? The wireless broadband services will be available across India now in the next 6 months. And the expectation is that there could be a jump in subscriber additions because of that. So there's a surprise waiting perhaps on the telecom business as well, you think? And will you add that to your, target price?
Honestly, our telecom team does build that in to a certain extent. And if I look at the ARPU estimates that we have, not only in terms of subscribers, but more importantly, in terms of blended tariffs, since the pricing of some of those services, particularly in the tier 1 cities, is obviously going to be at a premium to normal mobile ARPUs. So once you factor that in, blended ARPUs should continue to improve quite sharply over the next 2 to 3 years. I think our base case estimates build in about 200, 210 to 220 rupees going through for FY25. So as and when that plays out, that's definitely going to sort of positively impact the stock.
Okay, we'll leave it at that. Thanks a lot for joining in, Probal, and giving us your quick thoughts. So there is a decent set of numbers coming through and lots of positive surprises perhaps in the offing as well.